What's going on, everyone? We're going to do some technical analysis on the NASDAQ 100 in a little bit of a different, unique style and a different way from a top-down overview. I used to do this a lot for people inside of Evolution Traders during the 2020 kind of pandemic, quick recession, quick crash, and V-shaped recovery, as well as during the 2022 bear market that we had. And the reason being is because psychologically, it's a little bit easier to see the chart this way and kind of get your overall trend. What I have done is inversed, okay, meaning flipped upside down the NASDAQ 100 chart, okay? So let's kind of take a step back and let's look at this chart. And we're looking at the daily chart, and I'm also going to pull up the weekly chart, and I'm going to talk about some things that are going to start to make a little bit more sense in terms of the direction that we could be going, and how we can maybe align ourselves for some bigger trades, okay? Some more money-making opportunities, directional bias. So if we kind of look at this chart on a daily time frame, it looks like for quite some time, kind of going all the way back to, and I could probably scroll even a little bit farther back, but if we kind of look going all the way back to early December, you can see a lot of consolidation, okay? A lot of consolidation where we had a floor, a multiple touch point floor down here in 22,000, 21,000 multiple times. Touched it here, touched it here, touched it here, touched it here. Okay. So what this looks like, the longer you're in distribution, the longer you're trading inside of a range, okay, the higher likelihood that you're going to break out of that range, whether it be to the top side or to the downside. Now, if we bring ourselves to current time, well, we are currently trading down, okay? But if you look at the chart from an inverse perspective, it's pretty clear that we probably should have gotten short in this market right around the end of February. Now, that looks picture perfect in hindsight. And again, I know a lot of keyboard warriors and a lot of people like to say, well, it looks great in hindsight. Well, the reason why things look great in hindsight is because you didn't have the knowledge to kind of get short with the market. And I'll be completely honest, I've been about 90% short bias over the past 30 days, okay? On my day trades, that is. So when you think about that, if you don't have the knowledge and you don't have the information, you're just kind of playing a guessing game. You're sticking to what you know subconsciously, meaning, hey, market is pushing higher, we always go up, we can buy the dip, just look for the pullbacks, let's go long, okay, let's go short, let's go long. But if you look at this realistically, here on the 21st of February, we've reclaimed the 50-day moving average to the upside, quote unquote, meaning we've lost it to the downside, and then we confirmed it on the 24th. So either we could have taken a quick swing trade here or a quick directional bias where we're going to play above, quote unquote, underneath the 50-day moving average from a price of around 21,635 into at least 21,146, right? And that would be our next area of resistance. And it would also be smart to kind of cover some positions there, because you can see each time we came to the top of the range in this consolidation period, we pushed back down, meaning we went higher. So when we realistically broke this area of supply, which we've broken it here on the 25th of February, we also broke it here on the 26th of February. What you could have done was gotten long here for a max run breakout. And that max run breakout I would have been targeting would have been a price of about 20,500. That would have been our top channel. And then we could have, looked to hold a runner for that hyper extended move into the 200-day moving average. Now that price was sitting at 20,300. Not only did we touch the linear regression, but we kind of, just blew out completely this 200 period moving average. So this chart looks extremely bullish. Am I correct? Like if anyone in their right sense of mind was looking at this chart, you would say, oh my gosh, we're just going to race to all-time highs from here, right? This looks like we're going to all-time highs. So in theory, what is that telling you? This chart looks like it's poised, right? This market looks like it's poised to go into a bear market, okay? It would need some extravagant, and I mean extravagant, V-shaped recovery to even look remotely bullish. in any capacity. Like, we have so much work to do, right? If you look at it from the inverse view, we've got support here, 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 we've got support here. It would have to break through all of these areas of support, and you can see this would turn into just a complete V-shaped recovery, and then you would still be talking about, oh, we're going to run to all-time highs. It just, you know, technically, can it happen? Yes, it can happen. It happened in 2020. We had a miraculous V-shaped recovery and actually finished up over 20%, 25% on the year. But it's not common. It's not likely until we see deeper prices. Short-term wise, what could we be looking at? This previous day's candle looks like a bit of a pause, a bit of a rest. Realistically, since we've broken out of the 50-day moving average to the downside, again, remember, we are looking at this chart inverse. Since we've broken out of the 50-day moving average, we have not had a dead cat bounce. This was not a dead cat bounce. This is not a dead cat bounce. This is not a dead cat bounce. We have not had a dead cat bounce, meaning you start taking out prior areas, prior days channels, and you start to really bounce. We have not seen that yet in the better half of about a month, okay? This candle is signaling to me not that the bottom is in, but that we could be looking at a short-term dead cat bounce. So how would I look to be going about this if I'm swing trading, if I'm looking to put on a trade? This is going to be my max pain, okay? So today's lows is going to be my max pain. We start closing below today's lows, we're just going to keep continuing to, you know, just drain to the downside, okay? Which could happen. Like, you could still see a blow off, a capitulation blow off, where it's just a massive 500, 600, 700, 800 point day to the downside, and then an immediate wick up with a strong inverse hammer that could be signaling that's the bottom. And if that move happens, then yes, maybe we might be looking for, you know, a slow grind and recovery back up to the upside. But with just this indecision doji candle that's being printed here, what it really looks like to me is we might, you know, try to wash out off the open, and then we might try to hold, you know, yesterday's highs, and then we might try to bounce. And the area I'm going to look to see if this market wants to bounce to is going to be 19,754, which is 300 points. If we reclaim this five period moving average, this 5 SMA, if we reclaim this, it doesn't mean that the bottom is in. It just means that we will probably look to backtest that next area of support. And that's going to be 20,169 all the way to 20,380. So what I could see is maybe we start a little bit of a dead cat bounce. Remember, guys, this chart is inverse. Maybe we start a little bit of a dead cat bounce into 20,000, into mid 20, you know, 20,000 and a half. And then we start to consolidate here, and then we start to back test this support, and then we start to move lower. Okay. Because on this type of move, wouldn't this look to you like a breakout, back test, and continuation of the trend? Like, doesn't that make sense, right? Like, to me, it just makes the most sense that this market is going lower, and that we are not going to just have a 1 week reversal and we're going to be back trading at all-time highs. I know a lot of people think that, oh, you know, it's just tariffs. You know, Trump wants to see those rates come down. You know, there's an ongoing problem in Ukraine and Russia that we're trying to get, you know, good news to come out of, and it looks like the good news is coming. But guys, I think there's a little bit more here. The markets have been inflated for the better half of the past 3 years. And realistically, we're probably looking to have a miraculous run, but we're going to need to bring the value down even more. Now, the only thing kind of holding that situation up is the fact that a lot of stocks, big names, are down between 30 and 50%. Things like AMD, things like Tesla, things like Nvidia, they are getting down into bear market territory. So how much more can they go? Well, sure, they can go a lot more, but they're getting hyperextended. So maybe those stocks start to consolidate, you know, the Teslas of the world, the Nvidias of the world, the Metas of the world. Maybe those stocks are starting to consolidate and not really go up higher, but not really go too much lower. And then you have other things that maybe haven't lost their 50-day moving average yet that are going to get slammed next, and that's going to be the next wave. So while things like Nvidia and things like Tesla, they consolidate and they kind of grind a little higher, maybe that's where we see our dead cat bounce. But also when the stocks, and you have to go through the list, go through the NASDAQ 100, start looking at the list, stocks that are still trading at or just below the 50-day moving average that haven't had that explosive capitulation move to the downside, look for those stocks to start getting absolutely wrecked. And then maybe that's when you're going to see this market put in its next leg down. Okay. I think that we're probably going to get to prices now that I'm really looking at this chart. And again, hopefully you guys stuck around to the end of this video, because the weekly chart looks absolutely like it's poised for deeper prices. So if you're looking at this weekly chart, this is a clear downtrend, right? Which means, because it's inversed, we've been in a clear uptrend. However, what we're looking at here, okay, what we're looking at here is a very clear rolling bottom and a very clear double bottom, okay? And what we're looking at is a potential reclaim of this channel and a back test of this channel, which we have respected for quite some time, the better half of 2 years, and we just kind of continue the trend. So if you start to think, well, D, why wouldn't we just, back test this successfully and then just have this miraculous kind of recovery, which would mean that we're putting in all-time highs? Because of the situation at hand with President Donald Trump and what he wants to accomplish. You have to remember, all of this is under Biden administration, okay? And they just let the market float and float and float, and we continue to go into debt, and we continue to have high inflation, and we continue to have all of these, ongoing problems with our finances, right? But the market was just getting inflated. So in order to see a reset, in order to see a true strong bull market, you need to reset prices. And what this looks like is a quick rejection at this channel where I can see a little bit of a backtest, which would mean a dead cat bounce. And I can see that bounce coming all the way down here to even 21,000. But what that would ultimately create would be a higher low on this inverse chart, which would technically mean a lower high, okay? Since we're, looking at it from the opposite side, it would put in a lower high, meaning that once we come back into this range again, if we get over this linear regression channel, we will probably see prices of 17,000, and we could potentially see prices of 15,000. If you think that's extreme, then you have another thing coming. Am I for certain 100% that we're coming down into 15 to 16,000? Absolutely not. I would love if the market just kind of sweeps this area and starts this massive recovery from here. I would love that. But what the chart is telling me, and again, if you guys were looking at this chart, what does this look like to you guys? This looks like a major downtrend has just been broken, right? And it won't be officially broken until we start to close over this channel and start to close over this previous swing high. And as soon as we get there, you will probably pull back, meaning you will have another dead cat bounce to retest 19 to 20,000. And then we will probably see this flush start to happen again into the lower 16, 17, $15,000 range, guys, before this really starts to consolidate and starts to come back. And this is when Trump will be screaming at the top of his gills that he is recovering the market and we are financially going to be okay and that people are going to make so much money. Why? Because of these lower prices down here. For us to come back up just to where we were trading just a few months ago is going to be a massive return for stocks, an absolute massive return for a lot of markets. It looks like lower prices, guys. I don't want to be a fear monger. I really do hope that we turn around from here and have some miraculous recovery. What I do think short-term wise, I do think we are going to start to get a dead cat bounce here pretty soon, within the next, I would say as soon as tomorrow up until next week. So between tomorrow and the next 5 days, I think that we will get a dead cat bounce into prices of around 20,000, and we might actually see prices of 21,000 again. And a lot of people are going to be calling for new all-time highs. Trump just saved us. And then it's going to be that wave of liquidity that is going to get snatched up and then get absolutely destroyed if we start to confirm this, because this downwards chart is looking like we are starting to break out and starting a new trend to the upside, which technically means we are starting a new trend to the downside. Potentially could be a bear market. We will reach official bear market territory once we get down into this range here of about 17,000 and a half. This is going to start to reach bear market territory, which is 20% off the highs. And then typical bear markets are looking at greater than 20% to about 35%, and getting us down into that 15,000, 16,000 range is going to put us close to that 30%. And that's when you can start to finally see that recovery. How long is that going to take? You know, hopefully not that long. Normal bear markets last about 12 months. Correction markets last about 3 to 4. So right now what we're looking at is just the correction. We've officially entered correction territory. But if we do enter bear market territory, this could take us to the better half of the end of the year before we start to recover, or towards, you know, later Q3, maybe August, September, October, and we start to have that recovery. This could definitely go through spring, and it can definitely go through summer, and then we could start to see that reversal, which in a longer time frame of things, guys, it's not that significant. But for a lot of people that are going to constantly try to go long and add to their portfolios, you can get destroyed. So we definitely want to make money on the way down. Short term wise though, okay, so like very short term wise, this move looks extremely overextended. But it doesn't look like overextended where, okay, we start to bounce and we just take out all-time highs. No. Overextended means we need to come down here and test 19,700, and I want to see us test 20,000, right? In between 20,300, 20,200. That's going to be a break and retest. And I'd actually like to see some consolidation there. And then if you break down, then we would be looking at lower prices, and that's the way this trend would continue. So right now, being that we have reclaimed the 200 SMA to the upside on this inverse chart, is telling you that we need to retest it and to see if we're going to continue this trend to the downside. Hope you guys took something away from this video. Maybe you guys can try to do some technical analysis that way, where you inverse the charts, especially if you have a hard time trying to identify the markets when the markets are pulling back. It helps tremendously, and this can definitely also set you up for some macro swing trades that you guys can get involved in. I will see all of you guys on the next video.